How fast is the world of digital finance actually moving? I mean, we hear these huge numbers thrown around all the time, but it's something else to really get your head around the sheer scale of change, happening right now. Welcome to the deep dive. Today, we're plunging into, well, the really fascinating world of the global Bitcoin exchange market. And our exploration is based on some pretty compelling new data from cognitive market research, which gives you a great shortcut to understanding this whole rapidly expanding sector. So our mission today is pretty clear. We want to unpack the size of this market, sure, but also where it's headed, its projected trajectory, and figure out exactly where on the globe the most significant growth is actually happening. Okay, so to kick things off, let's just look at that global snapshot. Back in 2021, the market was valued at a pretty robust $13,558.9 million.
13.5 billion, yeah.
Right. And by 2025, it's projected to more than double.
Mhm.
We're talking 29,496.6 million.
Mm-hmm.
But here's where it gets really astounding. By 2033, that number is projected to hit a staggering $139,594 million.
Wow.
Yeah, which reflects an impressive compound annual growth rate, the CAGR, of 21.447%. So, I mean, we're looking at nearly a tenfold increase in just over a decade. That's not just growth. That feels more like an explosion. All right. What does this kind of sustained, aggressive momentum actually imply for the wider digital asset landscape? Is this just speculative hype, or are we seeing something more fundamental shift?
Well, what's fascinating here is how that 21.447% CAGR sustained over more than 10 years. It really tells a story beyond just speculative trading. This isn't just about the early adopters anymore. It strongly suggests increasing mainstream adoption and a really significant surge in institutional interest, too. It seems to be pushing Bitcoin exchanges from being, a niche investment into maybe a more foundational piece of global finance.
Okay.
And it does raise that important question. What foundational shifts are really driving this? Is it technology, societal behavior? What's powering this kind of relentless momentum globally? It really suggests a market that's, rapidly maturing and integrating much more deeply into the whole financial ecosystem.
That's a powerful global picture. But yeah, to really understand the dynamics, we probably need to zoom in a bit, see where this growth is actually taking off. Where are these foundational shifts most pronounced?
Let's dive into the regions, maybe starting with North America. The data calls it a key contributor to global revenue.
Definitely.
The market there is projected to grow from just over, $4.3 billion in 2021 to a massive $42.1 billion by 2033.
Yeah, and within North America, the United States, well, it unequivocally holds the largest share. No surprise there, maybe. Its market value is projected to climb from roughly $3.6 billion in 2021 to over $35 billion by 2033. That's huge.
$35 billion just in the U.S.
Exactly. But it's not solely a U.S. story. We are seeing pretty strong, consistent growth across the whole continent. Canada, for instance, shows a really notable CGR of 22.01%. Its market value is set to rise from about $322 million back in 2021 to over $3.5 billion by 2033.
Okay.
And Mexico also shows a strong trajectory, growing from $369 million to over $3.6 billion in that same period. So it's a clear indication of a continent-wide embrace, I'd say. Right, a broad base there. Okay, so from North America, let's shift our attention east to Asia Pacific. This is a region that's not just rapidly growing, but according to the data, actually boasts the highest AGR among all regions.
Okay.
We're talking 22.31%.
That's right.
Its market is expected to expand dramatically from just under $4.2 billion in 2021 to soar past $46.9 billion by 2033, almost $47 billion.
Indeed. And China is a significant contributor there, definitely leading the way by volume, projected to increase from $1.2 billion in 2021 to over $14.6 billion by 2033. But what really stands out, I think, is India.
Yeah, the report highlighted that.
It's showing the fastest growth overall within the region, and you could argue globally. It's expanding from about $570 million in 2021 to an impressive over $7 billion by 2033. That's an outstanding CAGR of 23.314%. Yeah, this accelerated growth in India is particularly noteworthy. It suggests a strong confluence of factors really pushing it forward. And beyond these, powerhouses, countries like Singapore and Taiwan are also contributing significantly. Singapore growing from about $109 million to nearly $1.3 billion.
Okay.
And Taiwan from around $199 million to over $2.1 billion by 2033. So real regional strength.
Okay, so a very dynamic picture in Asia Pacific, especially with India's pace. Let's move over to Europe now. Here we see steady yet still powerful expansion. It's showing a healthy CAGR just under 21%, 20.928% specifically, generating nearly $2.9 billion in 2021 and projected to reach over $28 billion by 2033.
Yeah, steady is a good word, but still very significant growth. Germany really stands out as the leader in Europe. Its market is projected to grow from about $574 million in 2021 to over $6 billion by 2033.
$6 billion, okay.
And the United Kingdom is also a prominent player. It's expected to grow from $372 million to over $3.7 billion. And, beyond those two, we see broad-based participation. France projected over $3.5 billion by 2033. Italy, over $3.1 billion. Spain, around $2.3 billion.
Right.
So it just further demonstrates Europe's consistent integration of Bitcoin exchanges into its financial landscape. Not quite the explosive CAGR of APAC, but very solid.
Got it. Okay, shifting south now, South America. This region is showing, well, significant emerging potential. Its market is projected to expand from $867 million in 2021 to over $9.2 billion by 2033.
Right.
That's with a robust AQR of 21.777%, pretty close to the global average.
Exactly. And Brazil really takes the lead in this region. Its market value rising from about $373 million to over $3.9 billion. And Argentina also shows a substantial climb, projected to grow from $153 million to over 1.7 economies.
Okay, and finally, let's group the Middle East and Africa together. The data notes their healthy and undeniable presence in this global expansion. The Middle East market is set to expand from $745 million in 2021 to over $7.8 billion by 2033.
Right.
While Africa itself shows a healthy CAGR of 21.006%, growing from about $515 million to over $5.3 billion by 2033.
Yeah, for the Middle East, we see pretty strong growth drivers across the board, actually. Saudi Arabia projected over $1.5 billion by 2033. Turkey around $1.5 billion as well. UAE over $1.3 billion, and Egypt also over $1.3 billion. So pretty distributed growth there.
Okay.
And then in Africa, South Africa is a top contributor, growing from $204 million in 2021 to over $2.2 billion by 2033. And it's also worth noting that Nigeria and the rest of Africa, lumped together in this data, collectively account for nearly $3.1 billion by 2033. So the picture is, well, it's quite clear. This is truly a global phenomenon. Every major region is playing a significant part.
Absolutely. Okay, so we've gone around the world. Look at these incredible numbers, these regional shifts. When we put it all together, what does this actually mean for you, the listener, and maybe the broader financial world?
Well, if we connect this to the bigger picture, I think this widespread, really exponential growth in Bitcoin exchange, it's not just about financial speculation anymore, not by a long shot. It clearly signals a fundamental evolution in, well, how value is exchanged globally.
Right.
And this trend touches on so many things: increasing digital literacy across really diverse populations, a significant expansion of financial inclusion, in previously underserved areas, and you can feel a palpable shift in economic power dynamics across continents, too.
That's interesting.
Yeah, it really suggests a profound reevaluation of traditional financial paradigms is underway. It demonstrates that digital assets are becoming, frankly, an undeniable part of our economic future.
Yeah, undeniable seems like the right word based on these figures.
Yeah.
So there you have it. The Bitcoin exchange market isn't just growing, it's undergoing this phenomenal global expansion. Every major region contributing significantly to what is truly a staggering projected valuation by 2033. It's a landscape that's just evolving at breakneck speed.
Absolutely. And considering these impressive projections, if the global Bitcoin exchange market really is set to swell to nearly $140 billion within the next decade, well, what does this imply? What does it imply for the everyday financial choices you might be making, or even for the future of currency itself? What opportunities or indeed challenges might emerge from such a rapid and widespread adoption of digital assets? And maybe, where will you look next to understand the ripple effects this will inevitably have on global economies?
Welcome everyone to the Deep Dive. Today, we are really plunging headfirst into, well, one of the most electrifying and frankly fast-changing landscapes out there, the Bitcoin exchange market. This isn't just about digital coins anymore. It's become this high-stakes arena where tech, finance, global policy, they're not just bumping into each other, they're actively reshaping one another, like constantly, in real time. So our mission today, let's try and pull back the curtain. Let's figure out what's really driving this market forward, what forces might be holding it back, and where this whole thing is racing towards next. Whether you're maybe a retail investor looking at your portfolio, or perhaps a startup founder thinking about opportunities, or even a policymaker wrestling with the rules. Our goal is for you to walk away with some quick, solid knowledge and maybe, hopefully, a few of those aha moments, to feel properly informed. Okay, let's get into it. Key drivers pushing Bitcoin exchange market momentum forward. So to kick us off, what's the absolute biggest thing pushing the Bitcoin exchange market forward right now? What's the main engine here?
Well, what's really fascinating, I think, is just how much Bitcoin's perception has changed and its utility, too. It's really moved beyond being just, a purely speculative gamble. The real aha moment wasn't just that big companies like Tesla or MicroStrategy bought Bitcoin. It was how they did it. Their really aggressive treasury strategies basically legitimized it as a corporate asset, almost overnight.
Right. It wasn't just a punt. It was strategic.
Exactly. It signaled the strategic hedge against inflation, against economic uncertainty, and that really forced traditional finance to completely rethink how they view digital assets, their whole risk framework. And then you look at the consumer side, especially in, say, emerging economies, people are actually using it for everyday payments, sometimes as a safe haven from really unstable local currencies. So this broad acceptance, both corporate and consumer, it's a massive driver. It's fueling exchange volumes globally in a way we just haven't seen before.
That feels like a huge shift from just, a few years back?
Yeah.
But okay, beyond why people are accepting it, how are they actually, getting involved? Is it really easy for the average person to just jump in?
Yeah, and that leads straight into another huge driver, the absolute explosion of crypto wallets and mobile trading apps. Think about platforms like Coinbase, Binance, Cash App. They've really democratized access, made it simple.
Right.
Seriously, with just a smartphone, pretty much anyone, whether you're totally new to this stuff or you're a seasoned trader, you can buy, sell, store Bitcoin pretty securely. I remember trying to explain Bitcoin to my aunt maybe 5 years ago. Her eyes just glazed over instantly.
Yeah, I know that look.
Right, now she's asking me about staking. So this accessibility, it's not just bringing more people in, it's directly feeding this constant surge in trading activity all over the world.
Sounds incredibly user-friendly now. But stepping back, what about the bigger forces at play, like governments? Are they actually helping here, or are they still mostly putting the brakes on? They tend to move slowly, don't they?
It's definitely a mixed picture, but increasingly, yes, some are helping. We're seeing a real boost from, let's call it, positive regulatory movement in some key economies. Countries like the US, Canada, Japan, parts of Europe. They're finally starting to set up clearer frameworks, rules of the road for crypto exchanges.
Right.
And that clarity, it's a game changer. It's like laying down clear tracks for a high-speed train. It attracts the big institutional players who are maybe sitting on the sidelines because things are too murky.
Right. They need that certainty.
Exactly. And it also gives retail investors a lot more confidence. So you see this steady rise in people participating and in the actual volume of transactions. The lack of clear rules was a major roadblock. And now that some big players are providing that clarity, it's unlocking capital and, importantly, trust. 2, key restraints. The challenges and hurdles.
Okay, so you've got this incredible momentum, this accessibility. It almost sounds like Bitcoin's path is, inevitable. But history kind of teaches us that anything truly disruptive faces pushback, right? It's never that smooth.
Right.
So what are the walls that Bitcoin is running into right now? What are the main challenges?
Oh, you're absolutely right. It's definitely not all smooth sailing. Despite all that forward momentum, there are still significant hurdles. Probably the biggest one is the regulatory environment globally. It's still very uncertain and, frankly, fragmented.
Patchwork is the word I hear a lot.
Exactly, a patchwork. You've got some countries really embracing crypto innovation, trying to foster it, but then others slap on heavy restrictions or even ban it completely. So if you're trying to run a global exchange, that creates this massive compliance headache. How do you operate consistently across borders?
Yeah, it must be tough.
And it makes those big institutional investors, the ones with serious capital, really hesitant. They need predictability. They need a stable legal landscape before they fully commit.
And sticking with challenges. When we talk digital assets, security always comes up. It's huge for people's trust. Beyond the sort of big headline-grabbing hacks, are there other, maybe more subtle security worries that chip away at confidence for the average user?
Yeah, security concerns and cybersecurity threats, they definitely loom large. Exchange hacks are still a persistent risk. Incidents like the Mt. Gox hack, even though it was years ago, it still sends a shiver down the spine for a lot of early adopters.
The cautionary tale?
Totally. It was like the Titanic moment for early crypto, a really harsh lesson in just how vulnerable things can be without, fortress-level security. And while things have improved a lot, the memory of those breaches It does erode trust. It really highlights how crucial top-tier security and custody practices are for exchanges. If you're a startup now, ironclad security isn't optional. It's day one stuff.
Makes sense. And then, okay, there's the characteristic that Bitcoin is probably most famous for. Those wild price swings. We all see the charts go up and down like crazy. How much of a barrier is that volatility really? And what's the deeper impact beyond just saying, oh, it's risky?
Right, the infamous volatility. It's definitely a major factor. Bitcoin is extremely sensitive to news, to market sentiment, to economic shifts.
Yeah.
It makes it inherently risky as an asset class.
Sure.
Now, obviously, this puts off the more conservative investors, the ones looking for stability. They see those swings and think, no way. But here's the interesting paradox. That same volatility is actually what fuels a lot of the market activity.
How so?
Well, high price swings attract speculative traders, people looking to profit from the ups and downs, and they ensure there's constant trading volume on the exchanges, whether the price is going up or down.
Okay. So it keeps the market liquid. in a way.
Exactly. It creates this really fascinating tension. The very thing that holds Bitcoin back from being widely used as, say, a stable currency for everyday buying and selling is also what keeps the exchange market itself so vibrant and active, albeit risky. It's a fundamental challenge if Bitcoin wants to achieve true mainstream use beyond just trading or investing. 3. Exciting trends, reshaping the future of the market.
All right, so we've covered the big pushes forward and acknowledged those persistent drags. Now, despite the challenges, where does this market seem to be heading? What are some of the really exciting trends you're seeing that are actively reshaping its future right now?
Yeah, there are some really interesting developments. One major trend is this fascinating integration of DeFi, decentralized finance features into the big centralized exchanges. Now, DeFi, just quickly, is basically financial services built on public blockchains. Think lending, borrowing, earning interest, but without the traditional banks in the middle.
Right, peer-to-peer finance, essentially.
Sort of, yeah. And what we're seeing is these traditional exchanges, the Coinbases and Binances, they're increasingly offering services like DeFi. Things like peer-to-peer lending directly on their platform, staking where you lock up your crypto to earn rewards, or yield farming, which is a bit more complex but offers potentially higher returns. This hybrid approach, mixing centralized convenience with decentralized features, it adds a lot more functionality. And it really attracts those savvy users who want more than just simple buying and selling. It's blending the familiar with the cutting edge.
Interesting, bringing DeFi features to a wider audience, maybe.
Potentially, yeah. Now, what about the bigger players, the institutions, the big money? How's the landscape changing for them? Are they getting more sophisticated tools?
Oh, definitely. We're seeing real maturation there with the growth of derivatives and other institutional-grade products tied to Bitcoin. There's huge demand for things like futures contracts, basically, betting on the future price, and options giving the right but not the obligation to buy or sell later. And of course, the big one recently, Bitcoin ETFs, exchange-traded funds. All right, the ETFs were a big deal.
Huge. And leading exchanges, places like CME, Binance, Kraken, they're really pushing these offerings to attract institutional traders. Now, for a retail investor listening, this might sound a bit complex, maybe not directly relevant, but it is, because these products allow big players to manage their risk better. And critically, they add massive amounts of liquidity to the overall market. More buyers, more sellers. It's a clear signal the market is growing up, professionalizing.
Got it. Okay, and then finally looking ahead, it's easy to just assume this market will eventually look like traditional finance, right? Concentrated in hubs like New York or London. But is that what's actually happening on the ground? Is Bitcoin adoption still very centralized, or are we seeing it spread out more geographically?
That's actually a really fascinating and I think underestimated trend. We are seeing strong, undeniable movement towards geographic diversification and, importantly, localized exchanges.
Okay, tell me more about that.
Well, we're seeing this surge in homegrown trading platforms popping up in places like India, Nigeria, Brazil, all across Southeast Asia, real local players.
Not just the global giants moving in.
Not just them, no. These local platforms are often incredibly effective because they're built specifically for their market. They use local currencies, local languages, they plug into local payment systems like mobile money wallets, which are huge in many of these regions.
Tailored for the local reality.
Precisely. And this localization, it's not just a nice feature. It is fundamentally driving Bitcoin adoption way beyond the traditional financial centers. It's actually making it a truly global phenomenon, accessible to potentially billions more people. It's about bringing crypto to where people are rather than forcing them to conform to the old financial world. Outro.
Wow. Okay. So we've covered a lot of ground. The powerful drivers pushing things forward, the stubborn restraints holding things back, and these really exciting trends shaping what comes next for the Bitcoin exchange market. So bringing it all together, what does this actually mean for you, our listener, whether you're that retail investor or the startup founder or the policymaker trying to make sense of it all?
Well, I think the key takeaway is just how incredibly dynamic this sector is. It's a true economic frontier, constantly shifting, evolving at, frankly, breakneck speed. It's definitely a sector to watch really closely and probably one to navigate with care. We've seen those powerful drivers: acceptance, accessibility, pushing hard, but we absolutely cannot ignore those persistent challenges. Regulation is patchy, volatility is real,
Right.
and the trends we discuss, like DeFi integration, institutional tools, that crucial global diversification, they all point towards a future where this market keeps innovating, keeps expanding. It's an ecosystem that really holds both immense opportunity and, let's be honest, significant risk, often side by side.
Indeed. A complex picture. So, as you, the listener, consider this constantly shifting landscape, here's maybe a final thought to chew on. What do you think ultimately wins out in the long run? Is it the undeniable push for broader acceptance and accessibility, the forces trying to make Bitcoin a truly global, everyday kind of asset? Or will it be the persistent challenges, the regulatory hurdles, the inherent volatility? Will they ultimately keep Bitcoin confined to being more of a niche, albeit very vibrant, speculative market? Something to think about as you watch the future of finance unfold.